Good morning, everybody. Investors, traders, friends. Lee Lowell here, smartoptionseller.com. Today is Saturday, June 13th, 2020. Welcome to another edition of the Saturday Synopsis. This is where I like to go over the charts, see what happened in the past week's worth of trading, and see what may be coming down the pipe for the next week. I would like to go over the charts, and I also like to give you some options information. Try to help you become a more smarter and more profitable options trader. Today we're going to be talking a lot about volatility. Been people asking me this week, Lee, what's going on with volatility? Things are jumping up all over the place again. So we will talk about volatility and how it affects options prices and why you need to know about it. So let's jump right in. Let's take a look at the charts. As we do every week, we look at the S&P 500 and the SPY specifically. It's the ETF tracking investment for the S&P 500. What's happened the past week? Well, last week and the last 2 weeks we looked at it. We had been looking at this 200-day moving average, which had been the line in the sand for the S&P 500, trading right around the $300 level. Last 2 weeks we blew right through it, right past it. So we broke through the resistance. Now we're trading above it. What happened? Yes, Thursday and Friday had a big move down on Thursday. Hadn't had a big move like that in a couple months, right? So big move down, and it created this little technical pattern called an island top reversal. Island top reversal shows up when you have a gap on one side and then another gap on the other side. You got the move up, right? You got the gap, few days worth of trading, and then a gap on the other side. The gap are these spots in between here that have no trading. And typically an island top, it's called an island top because it looks like an island, right? It's a couple little trading days here just sitting out in the middle of the ocean all by itself. So when we've had to move higher, then you've got the gap, a couple days, and then a gap on the other side. That's called an island top reversal, meaning the downside may be the next thing we see for a while. We got the downside on Thursday and Friday, and so we're probably going to meander around here, trade lower a little bit more. Now, why did the island top reversal, why did we have this big move down on Thursday? Well, a couple things. Number one, we've had this incredible move higher. We got some profit taking. Number two, coronavirus. Coronavirus cases are starting to tick up in some states here in the United States. So people getting a little nervous about that. We've got the stores reopening, beaches reopening, people out and about. Maybe not everyone's practicing social safe distancing, not wearing your masks. So we get people a little nervous about that. The Federal Reserve came out on Wednesday from their 2-day meeting saying that things aren't looking that great in the U.S. We may see a slower economy for a long period of time. Plus, they're keeping interest rates low until at least 2022. That's telling us that the Fed is a little worried about the economy. So we've got some selling. And we also had a ton of people sitting on the sidelines, people at home, wanting to get in the market. So they're pushing stocks up higher than they probably should have been. We got a great article that came out during the week. I posted it on my Twitter account. We got this: bored day traders locked at home are now obsessed with options trading. So you got a lot of people sitting at home learning about the stock market, wanting to learn about trading. So you got people who may not be, who probably shouldn't be playing in the market just because they don't know enough, but they're bored, so they've been driving prices higher. Well, okay. So anyway, now smart money's coming in. They're starting to sell it back off. So we have this on top reversal, got the move down. So we've got the line in the sand again here, the 200-day moving average. It stopped right on that line. So we'll see what happens on Monday, Tuesday. Do the bears have the momentum to push it down to maybe the 50-day moving average here, or is it going to bounce? A couple of more days of trading, we'll see. Now let's take a quick look at the Nasdaq, because the Nasdaq's been the strongest of all the indexes here. The Nasdaq, we talked about this. Look at this incredible V-shaped rally. Hit all-time new highs this week. Popped through that 10,000 point level. Never done that before. It's trading above it. Looked like it was going to keep going strong until boom, we had Thursday and Friday. Traded back below the double top here. Stopped right on the 20-day moving average. So once again, moving averages are always a line in the sand. Could stop it for a day or two, but we'll see. Maybe it's going to drop down to the 50-day moving average. The 200-day moving average is down here, so it's got a little ways to go for that. And let's take a quick look at the Dow Industrials. This has been probably the weakest of the three. It had resistance at the 200-day moving average. It blasted through that, also created an island top reversal right here. Gap on both sides, and now it's popped back down below the 200-day moving average, stopping right on the 20-day moving average, this blue line here. So we've got these moving averages that are at the moment giving some support, or that's the point of attraction, I should say. My thought is that over this next week, the momentum with the bears might be here, or may just meander a little bit, or drop down a little bit more. Just remember, though, governments around the world are doing everything they can to backstop any drops in the market. So that we have that to contend with. I think we've got the second quarter earnings coming out in July and August. That'll be a huge eye opener for a lot of businesses, and see how they fared over the last 3 months with the coronavirus. If the numbers are not that great, we may start to see some more sell-offs, but that's a couple weeks away from now, about a month away. So in the meantime, next week, we'll probably see a little consolidation from the sell-off, meander around a little bit. Let's see if the bulls have some muster to keep it back up, or if the bulls are going to be overpowering everybody at the moment. But one thing we want to talk about today is volatility. People are talking, they say, Lee, what's going on with volatility? Things are starting to jump around again. Let's take a quick look at the VIX. We typically like to talk about the VIX here. The VIX is the volatility and fear indicator of the market. It moves inversely to the general direction of the market. When the market is going down, like we saw over the last 2 months, volatility spikes. And when the market goes up, volatility comes down. It moves inversely. Well, look what happened right at the last week. It bounced right on its 200-day moving average. And Thursday and Friday, huge jump. That means people were getting fearful, and there was a big sell-off in the market, and the volatility showed that exactly right here. So the 200-day moving average, once again, is a huge line in the sand. It is a widely followed moving average by a lot of traders. So always check the 200-day moving average. And what happens with volatility? Well, not only does it indicate there's fear in the market, but it also has a huge effect on option prices. The one thing we always talk about is how to understand options trading, and how to become a smarter option trading. So you have to understand what volatility is all about and how it interacts with option pricing. Volatility has a direct effect on the price of an option. Now, when you trade options, where do you think those option prices come from? They don't just magically come out of thin air. They have to be priced out with mathematical formulas. And there's a couple inputs that go into calculating the price of an option, and volatility is one of them. Let's go show my little document here, where you've got 5 main determinants of an option's price that help give the option its value. We got the price of the stock, you got days until expiration. Every option has an expiration date. So that is a big deal. And volatility levels is a very big deal. Number 4 and 5, interest rates and dividends, have a small part in options pricing. I don't really look at that too closely. So we want to concentrate on these first 3 numbers right here. Price of the stock, you always know what the price of stock is. Days until expiration, you can always find out what that is. It's the volatility level that confuses a lot of people. They don't understand it. They don't know how to calculate it. They don't know how to factor it into the pricing mathematical calculation. So that's what we're going to talk about today, and why it's so important to understand volatility and how it could affect your options trading. So let's go back to the chart here. Volatility level, the market has its own volatility level, and each individual stock has its own volatility level as well. And what it does is it measures how erratic a stock has been trading over the past, and how erratic it's expected to trade in the future. So if you got a stock that jumps higher and lower all the time, it's got big ranges, it's going to have high volatility levels. And stocks that don't move very far, very flat, have lower volatility. And you can always calculate, you can always figure out what a stock's volatility is. And how do we do that? Well, I talk about this site all the time, iVolatility.com. Great place to get your volatility information. When you go to the site and you choose a stock, I put in Microsoft up here, and it shows you the historical and implied volatility levels. Historical tells you how the stock has fluctuated in the past, and implied is a guess of how it's going to fluctuate in the future. One of the things you could do when you get on the site is to click on the volatility chart right down here. Click on it, give you a great visual of how a stock has been fluctuating. Now remember, this is not a stock chart. This is not a price chart of the stock itself. This is a volatility chart showing you how erratic the stock has been. Obviously, you can see Microsoft. It's always a 1-year chart here. Look how flat it was, volatility, right around the 20% level, okay? Then coronavirus struck, volatility spiked. That's because all the stocks were moving down in price. It jumped from 20% all the way up to about 100%, and now it's actually come back down again. So Microsoft is trading roughly around 30% volatility. Well, how do we use that? What is that telling us? Well, you go into an option calculator. Once again, this is an option calculator at ivolatility.com. And on the left-hand side are the inputs. And on the right-hand side, it'll price out the call options and the put options for you. And you can choose, you have the current price of the stock. You can choose any expiration, any strike price you want and any expiration date you want. You hit the drop down, pick your expiration. So right here in the volatility input box is very, very important. So right now it's defaulting to Microsoft's volatility about 35%. If we change that number, so here let's take a look at the call option values right here. $3.50 per contract, $3.30 per contract. These are for the at the money options. Let's see what happens if we bump that up to about 80%, which was happening not that long ago. Click calculate and you can see both option prices changed dramatically, right? Bumped up in price. Everything else is the same. Price was the same. Strike price was the same. The only thing we changed was the volatility input. And both call option and put option values doubled in price just because of the change in the volatility. If we move it down to say like 60%, okay, calculate. So volatility is a big deal in the pricing of options. And how could that help you become a smarter trader? Well, you should know that if you're going to be a buyer of options, you're going to be paying a lot more for those options. And if you're a seller of options, you like to sell options when volatility is high because you get more money in your pocket. If we go back to the charts, VIX, think about if you're a buyer of options up here, you'd be paying sky high prices. And if the stock doesn't move in your favor, you're going to lose pretty badly on those options. If you're an option seller, hey, it's a pretty good deal if you're selling options up here, but you still have to be careful. So in order to make money off, and you can actually just trade volatility itself. If we look at a chart of the VXX, which is an ETF that you can trade yourself. It trades just like a stock. This is a way to trade volatility itself. And the VXX obviously spiked when the market was dropping in February and March, and now it's come back down again. So you can actually trade volatility itself. I've been doing this week when we were here. I bought some call spreads. I bought bullish call spreads on the VXX, and I bought some in the money call spreads, and volatility spikes. So at the moment, I'm making a little money on these call spreads. So you can play volatility itself if you like. Check out the VXX. And so just remember, volatility is a huge indicator in the price of an option. You want to understand how volatility works, and you want to understand how it affects the option prices if you're going to be a buyer or seller of options. Now, just because you buy options when volatility is high doesn't mean you're going to lose. It depends on how the stock moves itself. But if the stock doesn't go anywhere and you're a buyer of very expensive options, those options are going to decay on you very quickly. If you're a seller of options and the stock actually moves really far, really fast, you can be a loser as well. So you got to be careful. You got to take into consideration how the stock's moving. But in general, broad terms, if you're a buyer of options and those options are very expensive on a volatility basis, it's going to be harder to make money. If you're a seller of options up here, it's going to be a little bit easier to make money. So just take that into consideration. Volatility is a huge deal. So anyway, I hope this has been informative for you. Just remember, you can go to ivolatility.com, get all your volatility information, and also you can go to our website, smartoptionseller.com. I talk about this all the time. You go to, you can look all around the website. Don't forget, the Put Selling Basics free ebook. Do not forget to download it. Click on that. You can go to our services tab. We have a couple newsletters. We have our one-on-one coaching and the page that I'm on right now, helpful links. You could see what we have here. I've got some links that are good for you. And anyway, so that's it for me. Have a great weekend, everybody. Have a great week of trading ahead. This is Lee Lowell signing off.